Hey friends, welcome to another session of Bulls Arc Trading. Today we're going to talk about the trades which move unusually in a day and gives us like more than 100%. So to start with, a quick disclaimer, all this that we're talking about in this recording is purely an educational purpose. I'm not an attorney, CAPA, financial advisor or lender. So anything that you try to buy or sell should be purely your own discretion. Okay, so what is an unusual mover? An unusual mover is something which gives you a gain of more than 100% in a day. And that a ticker or a stock which moves, it could be because of anything like a news or a high volume. So something like which happened last week where we got news of COVID. So all the stocks which helped in working from home moved up very high, or something like a biotech stock. If an FDA approves something, that stock flies like anything, or if something is putting up too much of money on a stock and it goes up very high. So one example is LGVN that moved on Monday, and then in a day span it moved from $8 to $45. That's close to like 500%. Same thing on the next day, there is another stock called APVO where it gave us like close to 200% of profit. So the thing is how we find them and how do we play them. So there are many scanners which gives us these unusual movers. Uh, for me, the very personal or very easy way is something like market movers. That's in Thinkorswim. It's a free scanner, but the only problem with this scanner is it moves. It gives so many tickers, and it's very hard to track what is happening. The other thing which I found very interesting and very easy for me is it's a free channel called Telegram channel, which is Eliminated Trades Option in Stock, and they provide unusual movers alert. So something which comes over here, it says a new symbol LGVN was added, and then it gives me a date and time. So I find it very useful and easy when these alerts come. I typically just go into my Thinkorswim and then find out what is happening, and then I just try to rope in my entry and stop loss before I start playing. And how I do it, is that when I get an alert, so like the alert came something like at 9:17 a.m. That's the Chicago time, it's my local time. So what I do is, so 9:17 is somewhere around about here, right? So I would do is I'll find out what is the highest high in that running time, and then I draw a line. So typically I just pick up this and then say highest high is this. So I draw a line over here, and then I just wait, since it came out 9:17, which is this, which is low below that highest high. So I have to wait till we cross over here. So that means we wait so that we just see that there is a trend happening. People are just following this into that stock, and it is just not a false alarm. So I wait for this highest high to break. And then what typically can do is, if you're using Thinkorswim, you can create an alert as well. So like you can create alert at this particular level at 48, and then moment the close or the mic price is above 11.48, you'll get an alert in your system or through your system or through your phone, right? So, and then when we just wait, and then the moment the price cross over here, we get an alert, and then we say, oh, so this is where we're going to enter. So this is the candle where we are going to enter because of it has crossed the highest high. And then before we cross, we also have to identify what is our stop loss, because we should know if it is going south where we should stop. So my way of finding out the stop loss is I see when the alert came versus when I'm entering, what is the lowest low out of those candles. So in my case, lowest low is this, right? So I create another line. So I play in this bridge wherever, I mean, if my close price, my stock price goes below to it, this is where I'm going to enter exit out. But in this case, for LGVN, when the entry came, I waited for this line to cross, and the moment the line crossed, I entered. I had the some moments where it was going down, but I had to wait because it didn't cross my stop loss, and then it paid me off because it went up. And then how it went up, you can see. So from $8 or maybe from $11 when I had the entry, it moved so much. It moved from where it came till 45. Voila, like YOLO of a day, right? So just to summarize what I did, when the alert came at around 9:45, 9:17. So when the alert came, I came to Think and Swim. I saw where is my previous highest high or highest high of that particular day. I created a line and I waited for the stock to cross over that line. Then easy way was you can create an alert so you don't have to just babysit on the screen, and you can, and when you get an alert on your phone or from your on your screen, you can just come and see what's happening. So the time it crossed it, I knew in that case, before I enter, I also create my stop loss, and I say the stop loss is when the alert came versus when I'm entering, what is the lowest low, and I create a line on that as well, and that's how I play. So, so we know when to enter and how to exit, and then probably in all that play, there is a bigger concern or bigger factors of like risk management. What value of your portfolio you should invest into this into the stock. I have seen people just tell you to go and invest or you play, but then people don't tell you what is the percentage or what is the value that you should invest into risk management. And this is, and just my friendly advice how I play is that I always invest 4% of my portfolio value in any of the trade that I do. So for example, if my portfolio value is $10,000, so I would invest $400 in a trade. So just to explain you more, I just created an example. So my portfolio is $10,000, and then I invest 4% based on my thumb rule, which is $400. And then I also create like a stop loss there where I have to go and stop. So I don't want to lose more than $40 or 10% of my investment. So 400 is my investment and 10%, which is $40, is my stop loss. So same example, let's suppose we have an entry, which is at, for example, $10, and then I have an exit at $9. So with this case, I have a 10% stop loss, right? So my investment is 400. So my stop loss is $40 or my loss is $40, which falls into the alignment of what I'm thinking. But in an example where my entry is 5 and exit is 4, in this case, the stop loss is like 20%, which is way above my limit. So in this case, you will see your loss is $80, right? So what I have to do is I have to cut down on my investment, and from instead of 400, I have to do 200 to keep my loss as $40. So what I've done is I've just put down a rope into a simple formula. If you are very busy into trades, it's very hard to do all this mathematics. So what I do is you just do 5 in the entry, 4 in the exit, and then automatically it will tell you what is the investment that you should spend. I mean, you can play around with these numbers, which you want. If you want to increase your risk from 10 to 15%, you can do it, and it will automatically change. So this is how I use it. Probably what I'll do is I'll have this presentation and this Excel sheet available in the comment section or description of the recording. Feel free to use it, play with your examples. There are some more examples which came last week or maybe in this month of November, and then how profitable they are. All that came through the Telegram alert that I have been following up. You can also do it just by going into and subscribing it. The link will be also available in the description. So feel free to use it, see how it works for you, and leave your comments in the description and then tell me how it goes. Thank you so much.